Hello and thanks for checking out ChartGuys.com. We're proud to be one of the most successful technical analysis communities online, teaching you the skills to become a more confident, effective, and informed trader. Join our community of hundreds of analysts worldwide working together to learn the charts, generate profit, and achieve financial independence. For access to daily live chart analysis and market coverage, a thriving chat community, along with dozens of hours of exclusive educational materials. We look forward to seeing you. Let's check out some charts. Hello everyone, going to do a midday trade review of NUGT this morning, point some things out, talk about psychology as a trader, things along those lines. So starting it off this morning, I said to myself, last night I said to myself, it's been a great week of stocks, I'm in my flow, things are really clicking, but I'm feeling a bit overwhelmed, too much time on the computer, I want to take tomorrow off. So I came into this morning saying, I don't want to trade today. And I checked in at the open just to see, after such a volatile day yesterday, where's the S&P 500 going to open? Is anything going on? I do have a couple swing positions in the MJ sector. I just wanted to make sure everything's all right over there. So I sat on the computer, and the first thing that stood out to me is gold miners, the bull miners, are set to gap down open. And the general rule of thumb is gap downs are for buying. So the first thing I did was pulled up the NUGT chart, and I was checking in at about 8:30, 9 o'clock in the morning. And I saw the hourly RSI was down in the low 20s, and the 4-hour RSI was oversold. That was important to me. And then I looked at the 15-minute RSI, and I looked at everything, and I said, okay, we have an oversold setup, and I want to see what the open looks like. Are we going to flush down and dump, and things going to get extreme? So I watched the open, and I'll put up the 1-minute chart, because someone had a huge bid of 200,000 plus shares at $28 first thing this morning. So I watched that wall, and it got sold into a bunch. That person probably filled 100,000 shares at $28. And after about half of it got chipped away, and I saw the S&P 500 was holding up, I said, all right, I'm going to bottom fish this level. And a bottom fishing trade is when you make an entry and it's based off of a support that's very nearby. So if you get stopped out, there's very low risk. And if you don't get stopped out, there's some solid reward. And in this kind of trade setup, you're probably going to get stopped out more often than it's going to play out for you. But it's the risk to reward that has the favor. And I'll show you what I mean by that with my personal example. So I entered at 28.02 and I instantly put my stop level under 27.99 because this trade is only based off of that wall of support. And if that level breaks, then my game plan is out the window and I would then get stopped out for a 4-cent loss. So a very small risk. And if I'm looking for a 2 or 3 to 1 risk to reward scenario, I just need 8 or 12 cents. So the bulls started to follow through with their bounce. Again, this is the 1-minute time frame. And I made it to a half-day maker at 28.42, 28.43. I forget which I got filled at, probably 28.03. So 28.43 was my day maker mark, and I sold half of it right then and there because we got there in essentially 4 minutes. So that's the day maker level, and then that allows me the comfortability to put my stop loss, keep my stop loss at 27.99, and know that no matter what, I am going to be green on this trade. And that makes it very easy psychologically to keep holding. So then I just watched a little bit longer, and next thing you know, we're over $29. That's a 4% bounce, just about 4% bounce from the low. And I said, all right, I'm looking at a day and a half, 2-day maker right now in 10 minutes of trading, and I'm just going to lock that in. So in hindsight, obviously we now have a huge move going, and the bulls ended up bouncing 10% plus from that low of the day, and they're still going. So this is ending up being a huge bounce, and there's a lot of things that we can look at here. Number one, if I just left my stop loss at break even, I would have a week maker at this point. So that's something to learn. That's definitely something that I can look at and reflect back on and learn. Another reflection, and these are all reflections that I just made while I was transplanting some blueberries outside, digging in the soil and just reflecting on everything. So lesson number one, break even stop loss, let it ride. Go do my yard work, come back in 2 hours and see where it stands, knowing worst case scenario, I made green. Lesson number two, I could stand here and say, oh man, I woulda, coulda, shoulda, and feel bad and count all the money that I could have had. But in reality, if I am doing this long term, and I'm 9 years into it now at this point, I know that there's always an opportunity the next day. And if I go out and tell anybody, which I'm not going to do obviously, but any stranger, if I said, I just made this much money in 10 minutes clicking buttons, their minds would be blown. So I can either look at it and say, this is what I could have had and have a negative mindset and be lamenting about the trade, or I could say, this is what I made, this is how long it took, this is how easy it was, and be extremely grateful for that opportunity and know that tomorrow there'll be another opportunity just the same. That's the second takeaway. The third takeaway is I need to check myself. So I told myself I am not going to trade today. I broke a rule. Now, it was a trade that was very clear and low risk, smacking me in the face. So I took it, but I have to stop and check myself because the game that we are playing is a game of gambling and it triggers dopamine and all this, the same stuff that any kind of addiction, whether it's substance-based or psychological and behavioral-based, it's real. And this is definitely a real part of this. Again, if we're doing this long term and I'm doing this for tens of thousands of hours and hundreds and thousands of days, then I have to keep myself in check. And even though it was a winning trade, and it's much easier if it were a losing trade and I would go back and say, yeah, I shouldn't have traded. I told myself I wouldn't. But it would be easy for me to gloss over and skim over the fact that I broke the rule that I set for myself the night before, even though it was a winning trade. So I have to reflect on that psychologically and say, am I in control? Can I stop if I want to? And I personally am comfortable with the answers to that. But that's a little check that I have to do with myself to ensure that we don't get out of control and spiral down this wild game of digital flashing numbers. So congrats to the bulls that bought this dip. Gap down opens are generally for buying. The 4-hour RSI cooling off a big time. And of course, this bounce is in large part due to the S&P 500, which is up 1%. And of course, the bull miners just absolutely exploding. So congrats to the guy that got 100,000, whether it's an entity or one order or what. 100,000 shares, they are up a cool $380,000 in a couple hours, if that was all one individual. Either way, the 100,000 shares that filled at 28 doing really well. So where we stand right now, we lost the daily uptrend and we're seeing a huge bounce. So that's a great sign for the potential of a weekly bull flag. We'll be keeping an eye on it, and I'll cover it again here a bit at the end of the day in the market wrap-up video. But just wanted to give this check-in as all the psychology aspect of the trade was fresh in my mind. And one more point about the risk and reward. Again, 4-cent risk. And of course, at this point, if you were still in, the reward is insane. But even myself, who many would say you sold too early, whatever. But 4 pennies was my risk, and my reward ended up being, with the two positions combined, 73 cents. So almost a 20-to-1 risk to reward scenario. And I could fail that trade and get stopped out 10 times. And if I hit it once, it's still well worth it. That's why I love bottom fishing plays. And that's why, again, if you hit 1 out of every 5, you're probably going to end up way ahead of the game if your risk and reward scenario is appropriate, as is the bottom fishing trade. Thanks again. Have a good rest of your day, and we'll see you later today.